TTF, NVP and German power corrected off the lows from early August, but we're kinda stuck just below the preceding high from late July. Now the next question is, what's happening now? Because most of last week the markets moved mostly sideways in a by now pretty clearly defined range. The sentiment benchmark is showing us that the market is super indecisive, so right now at the start of this week we kinda wanna wait it out. The bulls will be confirmed above the ranges and the market will continue to swing sideways if we break a little bit lower. Hello everyone, my name is Marcello Kolax. I am the managing director here at Clever Markets, where we help institutional energy trading desks with embedding a systematic approach to trading with the help of our proprietary algorithms and a modernized way of using technical analysis. We are working with institutional speculative trading desks, procurement teams, LNG players and hedgers, and we might be the right choice for you if you feel that your classic supply and demand fundamentals are still valuable but require an update in terms of actionability. We are not here to predict or forecast the markets, but we will help you with systemizing your pre-trade decision-making process so you always know that you're making the best possible decision with all information available to you at the time. Go to clevermarkets.com to learn more or contact me directly on LinkedIn, Marcello Kolax. And now let's jump into the markets. The German power market is the key market to watch at the start of this week because last week it did turn from a mean reverting market into a trending market. Yes, German power usually doesn't really trend all that well, or it hasn't been over the past 3 years on average, but there is a slight chance for the market to continue higher, and we want to avoid a situation from late June where the markets simply pushed higher significantly. So in short, although all the markets look kinda toppy, TTF, NVP, German power, there's a chance that we might continue higher. But we do need confirmation. It all starts with the TTF front month sentiment benchmark. Every weekend we ask European energy traders where they think the TTF front month is gonna go next. We usually receive more than 100 responses every single week from traders that have an active stake in the market. So let's see what they think where the market might be going. So on our dashboard, you simply need to scroll down, click on weekly market commentary, go all the way down, and here you can see it. This Monday, the bulls were represented with 39%, the bears were represented with 34%, and the indecisive neutrals were represented with 23%. And you can see this is a reasonably good split overall. You can see that overall the neutrals have gained a greater share, the bears have declined a little bit, but are now more or less evenly split with the bulls. And this degree of indecision or equal representation is fairly unusual. We haven't really seen this summer so far. So that also means that during such periods of great indecision, neither the bulls nor the bears are clearly in charge at the start of this week. And once again, this is just one more piece of evidence telling us to wait it out until we actually get a clean break that would sway the market into either direction. According to our proprietary algorithms, the TTF front month is still in mean reverting territory and also still in a high likelihood bearish reversal zone. Now let's combine this with the chart itself. We'll start with the TTF front month daily chart, and you can see here this was the stellar rise that we saw from late June until the end of July. We corrected lower and then in early August we bounced higher again. We are not reclaiming the highs yet, but we are hovering just below this, and most of last week was spent in this range here. And depending on how familiar you are with candle patterns or how much you use them, then you probably know that this here looks like a bearish harami candle pattern. Well, at Clever Markets we have back tested all candle patterns, and this is available to our clients on the dashboard. And if you have access to our stuff, then you know that a bearish harami kind of works out half of the time, sometimes a little bit less. So it's worse than a coin toss essentially. But these patterns are still super good in simply determining ranges as to when a bullish or bearish case is being validated or invalidated. So what we're doing here for this candle, the bearish harami, by the way, is these two here combined, we would generate a bullish signal. If we get a close above 62.5, then this bearish setup would be invalidated. And the bearish setup from the candle would be validated if we move below 5819. So you can see last Friday, Thursday, Wednesday, the market was still reasonably indecisive, and you can see at the time of me recording this, the market has already opened a little bit higher, but you can see distinctively we still remain below the peak at 62.5. So the bulls are far from in charge. And if we move, we kind of want to see a daily close above it or a daily close below it. For now, our expectation is to move a little bit more sideways at the start of this week, with an eventual break lower being most likely. Now, why is that? That's simply because our algorithms are still showing that the market is mean reverting and in bearish reversal territory. However, of course, we know that we are wrong above 62.5, so we would never trust the algos blindly. We are always working with tight stops that would help us to confirm or validate our assumptions. Now, if we were to break lower, we could make it towards the 51.61, which is this trough from the 5th of August. I wouldn't really say that the long-term bears are in charge then. No, probably the market is then just continuing in its range, and we might be building a sideways trend within 51.61 and 64.48. And you can kind of see this play out, right? However, if we push above the 62.5, the bulls wouldn't be fully in charge yet immediately, because hey, look at this. We still get this peak from the 24th of July at 64.48. So just €2 above, we once again will meet super heavy resistance. And I kind of want to see this break first before going full on bullish. So if we combine this with a super indecisive state of the TTF sentiment benchmark, I say let's wait this out. Let's have a look at the hourly chart, because that sometimes can give us better indications of what might happen next. So at the time of recording, you can see that the TTF front month has opened much stronger. We already gapped higher, which is, in our case, you can see we preferred the market to hover sideways at the start of this week before testing the range support here, and this range is within 58.91 and 61.33 roughly. We can move it either way a little bit, but overall the idea was for the market to remain within this range. Now, what do we do that we opened this much higher now? First of all, I find the gap a little bit worrying. This gap might be closed, but there is no guarantee. So how do we know which one, what's going to happen next? What I would like to do this morning is probably mark out this first candle, which is like a really wide, I don't even know what it is. It's not quite a doji, not quite a spinning top, but either way, this first candle, 61.97, 62.6. I'm marking this out. Yes, I know, very tight. And then I just want to see what happens. If we close above this on the hourly chart, so we need one hourly close above it, then probably the bulls will continue on the hourly chart, and then also we might make it towards the 64.48 on the daily chart. If, however, this morning the hourly chart breaks below 61.97, then there's a good chance that we might touch this rectangle support again near the 61.3, maybe a little bit lower. So there's a chance that this here was a false breakout, but once again, there's no guarantee. For now, this morning, I want to see this range break before even considering the idea of trading. And that's all for the TTF front month. Yes, I know, very unsatisfying. We are in indecision / potential reversal territory, and the smartest thing to do here is simply wait for the market to give us an answer, so we don't have to anticipate what your industry colleagues might be doing. We just go with the stuff that's actually happening, and for now that means we try to do nothing. At least this morning. The NBP front month and the TTF and NBP front season, they do look fairly similar. Can you see this is the NBP front month? We have recovered quite a bit. We still remain a little bit below the peak from late July. We have gapped higher at the start of this week, but you can see our preference overall is still for the market to continue lower. So on the hourly chart, whoop, what is that? There you go. On the hourly chart for the NBP front month gapped higher, there is still a chance for us to continue lower. This might already be happening as I am saying all of this. So once again, there's a chance for this to have been a false break. For now, the range will continue and we retain a slight bearish bias for the TTF and the NBP, simply because our algos are showing us that we are in high likelihood bearish reversal territory. Now let's have a look at the German power front market, because over the past couple of weeks we have noticed that it was the German power market that moved first into one direction, and then the TTF and subsequently the NBP followed that direction. So that's why we want to keep a close eye on what's happening in the German power markets at the start of this week. So let's have a look. The one thing I want to point out this morning is the regime index. So you can see we have been strongly trending during the July rise, and you can see the market was like super hot and a little bit overheated. Then a couple of days ago we did reach neutral territory. Can you see here 7th, 10th and 11th and even the 12th of August. The market has calmed down a little bit. We moved into mean reverting territory, so that means the bulls are no longer in charge. We expect up legs to be as long as down legs roughly, but you can see here last Thursday and Friday the market turned marginally trending again. So that also meant that chances of bullish continuation are a little bit greater. Please be conscious of the language that I'm using. So I'm only talking in probabilities and if this then that. So I'm very careful with my language, because over the past 3 years the market character of the German power market has shown that we are now, even in a trending market, nearing bullish exhaustion territory. So usually we would say that probably once we reach the bullish state of 12, 13, maybe even 14, 10 also very high likelihood bearish reversal territory, the markets, even if they are trending, tend to top out. Remember the bull run from some time ago? Well, the bulls stretched all the way until 17, which was an unusually strong bullish state that we haven't seen for at least 3 years. So here our algos were showing us that this is an unusually strong state and the reversal might be likely. But in the first place, we did much further than we first thought. Right now, we are in the exact same situation again. The market turned trending, we are reaching the bearish reversal zone, and hey, honestly, we still have to go with the statistical evidence. We can't just let our gut feeling reign and be afraid of what happened a couple of weeks ago. So overall, the idea remains German power markets have a tendency to not continue by a lot towards the bullish side, even if we are trending. So there might still be a little bit of gas left in the tank, but we are very conscious of bearish reversal setups. However, that doesn't mean that we are turning bearish right away. So let's have a look at the chart. By the way, I'm just giving you the conclusion right now. Use tight trailing stops in order to be prepared for any bearish reversal. For now, if the market is trending, that means we are preferring a trend following strategy, but of course with tight trailing stops. So let's have a look at the German power front year daily chart. Here exactly the same. We had this stellar rise in until the end of July. We declined towards early August. We have reclaimed a little bit and then we started to move sideways last week. So you can see for now here, our preferred scenario is different to the TTF and NBP. Here we think that maybe a little bit more sideways before we start attacking the 11317 peak again. But once again, we need to see a break above the 106.97. Let's call it 107. However, the downside will be confirmed below 104, then the market will probably turn mean reverting again and then we'll probably swing sideways for a little bit. Neither has happened yet, so we kind of need to wait this one out. So let's have a look at some classic tools. The MACD has declined quite a bit. completely normal as the market is declining, that's all right. And we have now stabilized well above the zero line. We are tilting a little bit higher, so the bulls aren't really fully in charge, but we are kind of making progress. A bullish signal on the MACD would be given if the MACD line, the white line, pushes above the signal line, the orange line. Not quite there yet. Then let's have a look at simply some moving averages. So overall, since the market has been moving into this potentially tight range, potentially marking out a top here, moving averages aren't all that useful, but they are tilting higher, and that is a hint that, yeah, maybe we see a little bit more. The stochastic is pointing higher. Do not worry if we move into overbought territory. It doesn't mean that we are immediately pushing lower again. Moving into overbought territory on the stochastic simply means that we got a bull trend going on, so the bearish signal is only given if we get a close below the overbought territory. You can see here a bullish signal is given by moving out of oversold territory, and the bearish signal is only given if we move out of it. Us pointing higher in neutral territory is not really an indication for anything. It also does not indicate that the market will be topping out soon because we're moving into overbought territory. It's nothing like that. If you want to learn more about how to actually read oscillators, then I do suggest you join the next Clever Markets Technical Analysis Academy starting on the 28th of September. Link is in the description. Even if you do have some technical analysis experience, here you will build your own methodology that you might be tweaking for the rest of your career, but the foundation is being laid with the next 5-week TA Academy, so do get in touch. Alright, so for now, looking a little bit different on the German power markets. Now let's have a look at the hourly chart. So here we can mark out clearly an ascending triangle. And ascending triangles are usually resolved to the upside because they're showing us that the market is willing to buy at higher and higher and higher prices, whereas the resistance remains the same. So some pressure is building, and overall we do think that the market will push higher above 107 potentially. Of course, we put our level a little bit further away because we don't want to turn bullish at 107 just to be stopped out at 107.63 with the market turning lower. So that's why we have pulled our first key resistance level towards the peak from the 29th of July. So otherwise, if this was just a freestanding ascending triangle, we would put it at 107. So once you push above it, then the bulls are not fully in control, but they're given a chance at least to move towards 111.55. Now, if, however, the market starts to turn lower, or we do find like strong resistance at any of these levels, then the sideways range might continue. We are not quite sure what this range would look like. That's why we need to keep an eye open on where the market might be bottoming out, maybe at this gap support near 104, or maybe the trough here at 104.37, or maybe a trough here at 104.71, right? So it can be any of these levels. So we kind of need to keep an eye on it and see where we form bullish reversal candle patterns. Yes, these bullish reversal candle patterns sometimes just work out 50% of the time, but they can still help us with like identifying some sort of support. So let's have a look at the classic technical analysis tools. Well, within those ranges, do not look at trend and momentum tools. You can see the MACD not really giving us anything good right now, flip-flopping, giving us bullish and bearish signals left and right. Also, moving averages don't really give us any good signals right now. The only good signal that was given some time ago was when we reached this peak here together with this bearish doji candle pattern here, and we did get a bearish stochastic signal. Remember, the signal is only given if we move below the overbought territory. For now, no other signal given. So there's a good chance that we might find support at 106 this morning and push higher a little bit. Once again, as I said, the German power market has been leading the charge most recently. So if we do get a bullish signal of the ascending triangle, then the TTF and MVP might be pulling through. By the way, let's go one deeper just for the fun of it, depending on how strong you are with your chart patterns. So how do we generate an upside target? So for this, we want to look into the widest part of the pattern. So it would be here, but we always like to move in one step. So we would be measuring this distance here and then apply it here to the breakout direction. So in our case, I'm a little bit lazy, so I always like to use the Fibonacci extensions. I think they are always super clean. And let's just make this very rough. Click here, click down here to get the width of the range, and then let's simply apply this to here. So the initial upside target would be 109.75. So where does this land us on the daily chart? Well, somewhere around here, closing that old gap. Interesting, right? So this is how we are combining chart reading on the hourly chart, giving us upside targets, with our proprietary algos on the daily chart that are also suggesting eventual upside. And that is all for the German power frontier. Now let's have a look at the carbon markets. On the daily chart, zooming out, we are still within this ascending channel that has been directing prices since March. We have now touched the lower end of the channel once again. And you can see for now we expect the market to continue a little bit more sideways before breaking lower. Usually ascending channels are giving us earlier bearish confirmation signals than waiting for a move below the most recent trough. But because this is such a clean range, 80.57, 83.77, we want to wait for a break below this support level before turning bearish. And then if we do, the 200-day exponential moving average support at 78.45 might offer some additional support. Alternatively, and a little bit less likely, if we push above 83.77, then the bulls will simply continue within the ascending channel. The tools are showing us that right now on the MACD, we are bottoming out roughly where we have 1, 2, 3, 4 times before the market spiked higher. So let's have a look at this, right? So we bottomed out here before we spiked higher. We bottomed out here before we spiked higher. So right now we are in kind of the same situation, but chances of a bullish move are a little bit less likely because our proprietary regime index and trend indicators are showing us that the market is mean reverting, and we are exactly in no man's land. So there's no preference for bullishness or bearishness at all whatsoever. And with the evidence available to us, with the bullish momentum having recently strongly declined, there's an okay chance for the market to actually break lower. Now, let's have a look at the hourly chart because there's a little bit more evidence. So we can draw a pattern in a couple of certain ways on the hourly chart. So by the way, you can see this here is the channel on the daily chart, right? So here there's two things we can do. Number one, we can identify last week's range as rectangle. So the lines are a little bit blurry, but overall the idea remains the same no matter where we put it. The market has been pushing sideways. That's kind of clear. Another way of putting it would be this. And in this shape, the descending top line and the stable bottom line simply mark out a descending triangle. And descending triangles are usually resolved to the downside because it shows us how the market is willing to sell at lower and lower prices. So the bulls aren't really that confident at all anymore, whereas the support remains the same. Remember, this is the exact opposite as we saw it on the German power markets. We have an ascending triangle where the market is willing to buy at higher and higher prices. So here on the UAs, it's the exact opposite. So that's why this pattern usually leads for a breakdown, and this is also motivating the bearish stance on the daily chart. Also simply because we haven't been in bullish reversal territory on the daily charts algos as well. So what we want to do now is we want to wait for a break first below 81.6, and then bearish confidence will slowly grow once we push below the 80.57, and then maybe hit the 200-day exponential moving average support at 78.45. This bearish assessment would be wrong if we start breaking, well, first above this peak here, and then maybe this, and then maybe this towards 83.77. No matter like if you see this to be a rectangle or a descending triangle, right? Then we would probably simply continue higher. Some traders might choose the 83.77 177 as the bullish continuation signal. We'll leave it at that for the UAs. If you want to know what's happening on the Brent markets, on the NBP specifically, on Henry Hub, on JKM, then do check out our dashboard if you're a client already, or if you feel like this could help you in your day-to-day decision-making process, then reach out to us. There's a link in the description. Go to clevermarkets.com or send me a DM, Marcello Colax. Everyone, have a good start into the week. See you around and bye-bye.